And we are recorded. So this is Monday, September 8th, 2025. Thank you everybody for joining. Let's dive into the real estate market. I have a snapshot I'm going to quickly go over. I want to show you some really excited data. There's a lot of things going on. A lot of things that I want to dive into. So first and foremost, Q3. We're winding Q3, of course, down. So here we go, Q3 of 2025. Home prices are still up by 3% compared to last year. Personally, I really don't know what is going to happen. I do know that, of course, the new job creation report came out. I think it was last Friday. We only added 22,000 new jobs. So the Fed, there is no denying it. It'd be very surprising to everybody if the Fed doesn't lower interest rates. If the Fed does lower interest rates, does that mean that mortgage rates will go down? I personally think it will. Despite the fact that the last 3 times that the Fed lowered interest rates, September of last year, October of last year, and December of last year, during those times when the Fed lowered interest rate, we saw a spike in mortgage rates. Mortgage rates actually went up. I think this time, because last year the data for the job market, for unemployment data, wasn't as bad as it is this time. I truly think that we're going to see that mortgage rates will be dropping as well. Now, what I'm not sure about is what it will do with inflation, and if inflation will drive prices to be at the same level or slightly higher. Normally during a recession, other than in 2008, the last 7 recessions, home prices rose compared with inflation. So only in 2008 we saw house prices decline. The other recessions we saw that house prices slowly went up following the inflation for that time. So about 2.8, 2.4% house prices went up during the time of a recession. So a recession does not mean that it is bad news for real estate. I want to make that very clear. Now it can mean, if a lot of people are unemployed, that fewer people can afford to buy a new house. So that's why we need interest rates to drop. Inventory, as we all know, inventory keeps on rising. Although that we see that buyers that are not in a position that they have to sell. We as investors might be in a position that we have to sell. Some people that are going through divorce or having to move for work, they're having to sell their house. But people that don't have to sell the house, what we see is that people are taking their inventory off the market because it's sitting too long and they're not getting what they need. Rates remain high, and rates. Of course, we saw the biggest drop in rates over the last 11 months. Rates as they are sitting today, they're at 6.2%. We're very close to the 6% range. 6% has been proven to be the magical number. 6% means that 5.5 million Americans can afford a new mortgage or can afford a bigger house. So we were 3 basis points. And everything behind the dot is called basis points. We are 3 basis points away from the magical number. I truly believe that if rates drop below 6%, that we see a major uptick in real estate activity. So let's hope it gets there. Of course, we're coming from 7%, and here down here you see the charts. We're coming all the way from 7.9%. And we're trending downwards. So we're heading in the right direction. New home sales has slipped 0.6%. I have some data about new home sales for July and August for Wake County. Let me dive into that as well. And we do see that new home sales constructions are struggling. But there is some news about new home builders that I want to share with you as well. For North Carolina, July medium home sale prices is around $388,000 per year. It's up prices are up, and for home sales has climbed 24.4% on market. So if you're a flipper, if you're a home builder, or if you're just selling your house and you see that your house is sitting on the market for very long, that is true. Home sales are now sitting on the market for 24.4% longer than exactly a year ago. Now, the one thing that I want to point out, let me put this paper away because I'm done with that. What I want to point out with you, why I really think that we're heading for something great, is during COVID. I don't know the exact number. Maybe I should have looked it up for this presentation. But during COVID, Warren Buffett was sitting on a record number of cash. He had the most cash in his pocket. Well, you and I were making money hand over fist during COVID in the real estate market. Warren Buffett said, I am pulling out. So then why is Warren Buffett right now pulling into the real estate market when everybody's saying the real estate market is not good? Well, he knows something that we don't know, apparently. And Warren Buffett always has said, when everybody runs away from something, he's running towards it. So everybody's running away right now from the real estate market. He bought for 991 million in stocks, almost $1 billion in stocks. So he's getting these stocks, of course, very cheap. He bought them in Lennar and D.R. Horton, two of the largest national builders in the country. But here's the thing, as whatever ChatGPT or Gemini is saying here as well, Warren Buffett is not doing that because the stock is cheap. He also knows that something is coming, something is up, right? Something is about to happen in the real estate market, and he truly believes that the real estate market is going to pick up. So this to me is exciting news. Now, does it mean that in September we're going to see a record number of home sales? I don't think so. I think it will slightly steady go up, but this to me means we have surpassed the bottom of the real estate market. We are in the upward trend. We are not going to go down more from here on out. From here, I truly believe that from here we will see a slow rise and then into the new season of 2026. So Wake County, I wanted to point this out. Wake County saw the biggest uptick year over year nationwide, almost 20%. This actually made an article in the Triangle Business Journal that Wake County nationwide saw the biggest uptick in pending home sales year over year, almost 20%. So buyers are still looking for a deal. And that's why I said earlier, I really think that we have surpassed the bottom of the real estate market. And I really think that as soon as rates are going to come down, let's see when the Fed meeting is. The Fed meeting is on the 17th. Let me verify that. September 2025. Yep, can't even type. Yeah, 17th of September. So 17th of September, that is, to be precise, in a week from now, end of next week, we will know with how many points the Fed is going to lower interest rates and what the impact is going to be on the real estate market. So let's look at the housing market here in North Carolina. These are the one of it says here 300 markets, but they have outlined 105 markets. There's a few markets in here that I wanted to point out. There's a few North Carolina markets that are made this list. Of course, Rocky Mount is the highest for North Carolina, 3.51% decline in home sale prices. So if you're a flipper in those markets, I would anticipate that if you rent your ARV, that you at least have to account for 3.5 or 5% decrease in home value. So make sure that if you are in that market, that you lower your price and set your price to the market. Make sure that this data is helping you calculate for that decrease in price. Raleigh, we see a decrease in price of 2.2%. Brett, I'll come to you here in a second real quick. Asheville, we see a decline of 1.2%. We see a decrease in Charlotte and in Durham of North Carolina, lower than 1%. So this is all data that I have from Resi Club. So let me put it in the chat for you, Brett. Resi Club is.com. Resi Club is where I get the data. You have free data and pay data. You see a lot of this data on my Facebook page as well if you follow me. Here, there's another few markets here in North Carolina, Burlington here, and Greensboro. Very insignificant change. The really big change is in Rocky Mount. One of the reasons that I am no longer investing in the market. It's just too volatile for me. It goes up, but it also goes down very steep if the other markets are not really doing anything. All right, let's dive into the TAR report. This is a paid report. If you want to be part of this report, you have to sign up for this. You have to pay for that, this type of data. Wake County. I just pulled data from Wake County. And what we can see here is that last year we sold 314 units in Wake County. This year we did 361. It is still down from June, and June is still down from May. This is normal. This is in a normal real estate market. This is very, very normal. We always see that May and June are the biggest months in real estate. Yes, we did see a major uptick in October of last year. I still scratch my head. Why? Because again, September, the Fed lowered interest rates, and in October, we had higher interest rates, but yet we saw an uptick in activity from September to October of last year. So let's see what this fall is going to bring. Fall in a traditional real estate market. I'm talking 2019 and prior. In a traditional real estate market, the fall and definitely the winter are slower markets in real estate. So if you're sitting on inventory, wait until next week before you become really, really aggressive with trying to turn your inventory. At least that's what I'm doing. I have a few properties on the market that I really, really want to sell that I don't want to be sitting on. But I'm going to wait a week before I become incredibly aggressive with my pricing because I'm very curious to see what next week is going to bring for the Fed and the interest rates. And I kind of have the feeling that, yeah, there is some more activity around my properties, but I'm not seeing the uptick yet. I feel that people are waiting to see what is going on. Townhomes, same data as for single family homes. It is slightly up from last year. Here we see that there is a slight increase in prices again. And I've said this last meeting, I'm saying at this meeting, it keeps blowing my mind that prices in Wake County keep rising. It keeps, the reason I say that is that unaffordability is at an all-time high. That means fewer people can afford homes, but yet home prices keep rising with an interest rate of 6.2%. So let's see what home prices are going to do when the rates drop to below the 6%. Anyway, what is it per square foot price? Per square foot price, homes are coming down a little bit. This to me, I don't know if this is a significant number to me. That this can just mean that people are buying larger homes rather than smaller homes. That's because the reason I say that if you buy a larger home, the square foot price per square foot goes down. Here you can see what are the top cities in Wake County: Raleigh, Apex, Wendell, Fuquay-Varina. I keep saying, you guys, Fuquay-Varina is the center of the universe. Don't be haters. But anyway, 68 days on the market. This is the days on the market. If you want to be in the most competitive market in Wake County, you invest in Apex. You invest in New Hill, of all places. Anger. My word, like these are all secondary markets. Anger is a secondary market to Fuquay. And in Fuquay, it takes 82 days, but yet in Anger, which is booming right now, this is a surprise to me. Zebulon, Secondary market to Raleigh, of course, Nightdale, all in that same area. So very interesting data here. Let's go to the next report. Let's zoom in a little bit here. Johnson County, because you guys, I know you guys are investing in that as well. Johnson County, we see a slight uptick from, Johnson County sees a slight uptick from last year. 2 more houses sold. So not significant, but again, April and May were the highest months here. Here we see a decline in home prices. So in Johnson County, we see that the average home price went down from $350 to $334. I'm not sure what it means. That can mean that there's more flippers there, that there's more distressed properties that have been sold. I know that Johnson County always is very focused on flippers. There's a lot of people in that county. So let's see over here where the biggest cities are. Of course, Clayton, Garner, Wendell, Zebulon. Here, Clayton, the hottest zip code. I am right here in Selma and in Smithfield, and I agree with this stat. Dark blue means super cold. I turned some of my flips into rentals because I was unable to sell them. Let's dive into this report. Let me see here real quick. And this is Durham County for those that are flipping in Durham. Here we go. By the way, this to me is not a surprise. When I started investing in 2016, I focused on, this was my stomping ground, 7703 East Durham. East Durham, still find really great deals in East Durham. East Durham is really, really up and coming. I invested there in 2016 thinking it would be up and coming then. I'm only 10 years too early. But anyway, let's see here. Durham, Chapel Hill. Of course, there is not much in other cities in Durham County. Price keeps pretty steady, slowly on the rise again since April. And the average sales price per home is going down, but yet the square foot price is going up. So this means that people in Durham are focusing on smaller homes. It's my takeaway from that. We saw in Raleigh that the price went up in Raleigh, but the square foot price went down. That to me can indicate that people are focusing on larger homes. Here we see the opposite. The price is going down, but yet the square foot price is going up. It's an indication that people are focusing on smaller homes. Let's see here. We have September. This is new construction. I don't know if you guys are in new construction, but what is the new construction doing? I'll dive into this real quick. You see Raleigh, Durham, Fuquay, Angier. Angier, we just saw Angier was one of the smaller cities that made that previous list. And then this is all 7 counties combined together around Raleigh. So let me see here. You have Wake, you have all the other counties here. Let's look at the numbers. Raleigh, Durham. So here you see if you focus in this area, if you really focus from almost to Smithfield, Smithfield, almost from Fayetteville to North Raleigh. You see all of this, the cities here. Use this as your advantage. If I was you and I'm sitting here on this meeting and I want to know what I need to do, where I need to go, I would focus on these cities and I would focus here on days on the market. Right, days on the market. The lowest days on the market right now is in Carborough. Carborough is at 20. You see Benson is at 23. Youngsville is at 30. Mooresville is at 28. Garner is at 28. So really, that's where people want to move to. That's where most of the activity is happening here. Chapel Hill, 23 days, average days on market, 25 for Cary, North Carolina. Already touched base on this. Rates continue to go down. This is the benefit of a very weak economic report that came out last week. Again, for those that joined later, a recession does not mean that house prices will drop. House prices only dropped from the last 7 recessions. House prices only dropped in 1 recession, and that was in 2008. Other than that, it will follow the inflation. Even if you have a deflation, I looked into that. We had a deflation in the 1970s. Even in deflation, mortgage rates went or mortgage prices went up, right? In a deflation and an inflation, deflation means that the real economy is not growing; it goes backwards. Real estate is a very, very safe investment for people to be in there. Anyway, just from the NAR, I always go to the NAR real quick. I always mention it in this presentation. So what is going on nationwide? As you can see, the South, we have the biggest activity still for all of the markets. We're trending down in pending home sales slightly, month over month. So we're combined all these markets together, North Carolina, Florida, Texas, right? All of these markets combined together, we are seeing a slight decrease in pending home sales. We are tracking for 4.1 million units sold this year. Again, that activity hovers around the same type of activity that we saw in 2008. So if you're out there and you're getting started or you're thinking about getting started, yes, it is definitely a challenging market out there. You have to be very competitive in your pricing. You either put a really good product on the market, or you make sure that you price your product right. I had a product that I put on the market in Wilmington on a Friday, and on Monday I was on the contract. Some of you will argue, Erik, your price must have been too low. You must have not calculated that right. Probably, maybe. I can get into that, but I rather make $20,000 now, which I made on that flip. I rather make $20,000 now than I'm having to hold it and having to turn it into rental and probably sell it next year. So that is the real estate data. If you have any questions now, I'm going to open up the entire meeting for you to ask me questions. Put them down in a right button in the notes section. Type in your question that you had, like Brett did. Brett just asked me, what is the source of your data? Brett, I just showed you, it's Resi Club. It is the NAR, paid report from TAR and stuff like that. So Tori is asking me, and Tori, come off of mute as well. Tori is asking me, what with the relative recent BLS head firing, especially with the time passes, do you anticipate getting that the information by other means? So you're Tori, you're asking me if because of the BLS head that was fired, if I still trust data that comes out. Do I hear your question correct?
Yes, sir. Yeah.
So fair point, very good point. But that's also why I pull data from different resources. I never rely on one particular resource. Yes, I always go to the same resources that you see in my meeting. That's the NAR Resi Club, the TAR report. I Google information. So I make sure that I verify information. Is it to me scary or worrisome that people get fired over publishing the wrong or the right data? Yes, it is. But that's why I never, and you should never, focus on one source of data. Make sure that you pool from different angles. And one of the articles that I mentioned is the Triangle Business Journal. Triangle Business Journal was the first to come with the article that we saw an increase in pending home sales year over year, which was the largest in the nation. So then I started doing some more digging around that. When I see the NAR information, the NAR, if you look at I just X'd out on that, but if you look at the NAR information, the NAR includes the entire South. So if you look at the NAR and you say, oh, the South is only down, pending home sales in the South are only down 0.1%. Yeah, that doesn't mean that this is the same for Raleigh. So yeah, not to make it political or not, but I hope that we continue to have very good data, but make sure that you verify your data with different sources. And if they don't line up, then try to see where is the gap. One of the things that I did prior to this meeting, I normally prepare an hour prior to this meeting, dive in, get my ducks in a row. But, I look at data, which I told you guys, I look at data almost every day. But for this meeting, I really sit down and get my resource together. And I couldn't see in the NAR report at first, in the TAR report, sorry, I couldn't see that Raleigh had a 19.9 uptick in pending home sales. So I started verifying that, and at some point I was like, I'm looking at the wrong information. So I always verify my data, making sure that I provide you guys with the right data.
Thank you.
Absolutely, but any other questions? We normally stay here in another hour. You feel free to come on and jump off as you please. But ask me questions. Lisa's asking me, Morgan Stanley stated today that we are coming out of a recession.
Yep.
Okay, tell me more.
Well, I mean, I was looking at their numbers, and they were talking about, they said when they start dropping interest, mortgage rates, interest rates, of course, that means the bond market is beginning to have some issues. That has nothing to do with, the Fed rate has nothing to do with the mortgage rate, which is pretty much true. But I've always heard, like from college and all my finance classes up until now, that we don't know we're in a recession until we're coming out of the recession. Because then because you don't know you've hit bottom until you start going back up. And that's what Morgan Stanley said today. They said now, like you said, you're seeing an uptick in housing and pricing and all that. Just look at numbers. Morgan Stanley said we're coming out of this recession, that we're through it, and they see everything going up from this point. They got a little pushback, but they kind of know what they're talking about. They've been doing it a while.
Yeah, and it's kind of what I said earlier, right? Like if Warren Buffett is investing $1 billion, $1 billion, not a million, $1 billion, he knows something. Like a 1% change in the stock from Lennar and D.R. Horton, a 1% change is significant amount of money. It's more money than some of us are making on an annual basis, right? So to me, that what you just said is a little bit of a surprise, but it kind of goes hand in hand what Warren Buffett is kind of doing, right? Putting $1 billion into the real estate market. Like you're not doing that if it's going to change.
Erik, I read an article about that, buying this $1 billion bond.
Yeah.
I read that the reason he's buying Lennar and D.R. Horton and things like that, because these builders are now building the house to rent, not to sell. And that's the thought process why he's going into those builders, because he's looking at these new homes. Because I don't know if you've seen, there is a communities of Mungo home and couple of Lennar home. Entire community was bought over by investors, like the Black Knight and things like that. So they are buying more and more new home just to lease out. There is a community in Wendell Falls, which is the entire community of townhome is for lease. They have a leasing office, they lease the whole townhome, just like an apartment.
But and 100%. But let me show you this, because that is 100% true. And sorry that I didn't mention this, but the build to rent mortgage rate, as you can see, it's much higher than the average rate that we currently have, because you're paying rent and you're trying to pay off your mortgage. What I mean with that, Bippen, is that he wouldn't do that even if that product, you need to see an uptick in product. You need to see an uptick in buyers even for that product. So he is saying that even that product is going to increase, right? If you look at the average rents right now, nationwide rents are trending down. So build to rent is in the same bucket. So Warren Buffett invested in D.R. Horton. Yes, they will do the build to rent philosophy there. Blackstone is doing that as well, right? Blackstone still offers over asking prices to buyers to kind of offset to kind of get the property because they're doing build to rent. So they're making a tremendous, I don't know why this, they're making a tremendous amount of money doing build to rent, tremendous amount of money, right? So I hear that Warren Buffett is doing that, but again, you need to have buyers for that product. And in the previous months, even the build to rent was very lacking. A lot of builders offered build to rent. So he's seeing something in the market that we haven't seen yet. So it's very interesting what Warren Buffett did. Brad said, do you think that the Triangle Business Journal is a worthy subscription? First subscription, Brad, that I got. If you want to be up to date in business, definitely in real estate, Triangle Business Journal is what I got. I love the Triangle Business Journal. So is there a different publication? Yeah, the TAR report that I showed you, TARR.com. You can have a subscription there. It's very detailed data. That's the word I was looking for. Where Business Triangle Journal will have articles about downtown Raleigh, about Wake County. So if you are an investor and you are in the Raleigh market, I can definitely, Triangle Business Journal can absolutely recommend you that subscription. Yeah. See, Neil even said the same thing. Awesome. Any other questions, guys? Normally you guys fire away. Is this the calm for the storm? Are you guys anticipating a higher uptick in real estate as well? Or do you guys have any other questions for me? You can send me your deals. I have evaluated deals for a lot of people on this call in the past month or so. Pinehurst market. Brett, come off mute. And what do you want to know?
Yes. Hey, thanks for the meeting.
Absolutely. Thank you for joining.
I was at a lunch and learn a few weeks ago, and there was one gentleman there, and he was talking about, I think it was Pinehurst area, that he was finding a lot of opportunities. It seems like I always thought of Pinehurst being in the middle of nowhere. You know, it's kind of southeast of the Triangle.
Yeah.
But I didn't know if anyone else had any experience or if you had any input on that Pinehurst community. He said there was a lot of opportunity. I know there's some wealth there, but I think it's more concentrated wealth.
So Lisa says, let's look at the data, right? You have golf people, retirement community. If there is a lot of inventory, that doesn't really specify if it's a good market or not, right? Because there might be a lot for all that matters, right? Rocky Mount might have a lot of inventory as well. But let's look at the data, because Rocky Mount right now is declining by 3.5%. So what I like to do in this instance is something, Brett, that you can do as well, or anybody that can do on this call. So when you want to explore a new market, when you want to go into a new market, first and foremost, if you're a beginning flipper or a beginner builder, whatever you are, I always say focus on one zip code and one zip code only. Because one other person that I help out, she wanted to make an offer on a property. It came on, and 30 minutes later, yes, this week, 30 minutes later, or sorry, last week, that property was gone. So deals, if a deal is still a deal, it still flies off the market. If you are a flipper and you're focusing on 6, 7 zip codes, you don't become an expert in one. It takes you too long to evaluate a deal. So if you want to start, my recommendation, do what you want to do, but my recommendation is that you focus on one zip code. Brett, back to your question. I always go to Redfin. So let's go look at the data. So if you type in, you literally see here what I typed in on Google: Redfin and Pinehurst NC and data. And then I'm going to look at the data. So then because real estate is nothing less and nothing more than a numbers game. It's all about the numbers. So medium house prices is at 550. We see that the price is going up by 14.6% year over year. Whew. So that means it's a strong market. I like this so far. So far, I'm liking it. 14.6, and we see that median days on the market is 29 days, but it's 14 days higher than last year. So inventory is rising, but still 29 is still good. So if I look here, here's what I want to look at, right? Homes sold. This is June and this is July, so this is very normal. June is normally higher than July. This is January. This is January. So we're slightly up from 2023 as far as the last 3 years. Let's look at the last 5 years. Whew. 2023 was definitely the slowest year in homes sold in the Pinehurst. That means 20 homes sold. You see that down. Oh, you see that down here. If I move my mouse, it moves away. Oh, but you see here, it's 20 homes sold in January of 23. In January of 25, 24 homes sold. So slight uptick. So let's go to July of last year. July of last year, they sold 41 homes. And this year, they sold 39 homes. So pending home sales are trending. It's even, or it's 3 more down from year over year. Then let's look at June. June of last year, they sold 37 homes. June of this year, they sold 47 homes. So it's a very stable market. They definitely saw a peak in April of last year, where they sold 56 homes. So you're not doing a tremendous amount of homes in that area, but yeah, the price is up. Days on the market is slightly up. It is very stable. So then you have to figure out what type of product do you have to put down to really compete with the inventory to stand out, so to say.
With that Redfin, does that require a login?
Nope.
Because I'm not seeing. I'm on Redfin now, redfin.com, but I'm not seeing trends.
No, so you need to go. So don't go to redfin.com. X out. Go to Google. And in a search bar, you're literally going to type in Redfin and Pinehurst and data.
Okay.
And then if you do that for here, so let's do Rocky Mount, right? I was just bad talking Rocky Mount, so I gotta back up my. So if you do that if you type in that whatever criteria you type in, but if you get to this, then go back a page and find the page where you have the data. So here we are. So homes sold year over year is 23.7% down. 71 days on the market in Rocky Mount, 25 days more than last year. Price is up 2.5%. Now, and here, this is what I mean. If you can see here, it is flat and it is not even peaking. It peaked in January of this year. Of all places, when every market was down, Rocky Mount was high. Now every market is high and Rocky Mount is down. But May of this year, Rocky Mount sold. May of this year, Rocky Mount sold 63 houses. May of last year, 53. So Rocky Mount is pretty flat. Saw a big drop from 63 houses, in May to 41 houses in June, and only sold 45 houses in July. So as you can see, it is a little bit trending down. The peak was in August of 2022 when they sold 78 houses. The next peak was 73, and now the next peak close to that was 63. So it is trending down a little bit. Year over year numbers are incredibly low, almost 24%. So this has to do a little bit with the fact that Rocky Mount was very, very, very booming when Raleigh was way too expensive during COVID. And now that people can get other deals People are getting moving closer. We just saw in another report, I believe it was this report. Yeah, Zebulon is high, night deal is high, so people are moving closer to the Raleigh area rather than driving all the way to Rocky Mount. Rocky Mount Raleigh is, depending on where you are, of course, in Rocky Mount or in Raleigh, but it's about 45 to an hour commute. So, and we can do the same thing for. I said that one of the markets that I am in, Selma. Let's go look at Selma. Oh, see, now I'm clicked on the wrong one, so let's look at this one. Look at this. No wonder I never sold in that market. 60% decline in home sales in Selma of North Carolina. Nobody wants to move there. Last year, everybody wants here. Last year, June, everybody wanted to move there. Or what is it in 23? Everybody wanted to move there because of no, here. I need to look at this. Yeah. Everybody wanted to move there in 23 because Clayton was overpriced. Now everybody's moving back to Clayton. So be very careful when you invest in secondary markets, and you need to know what is a secondary market, right? Like if you look at this report, where was Clayton? Is this Johnson County? This is Durham. This is Joko. Clayton is the #1 market in Johnson County. So all of these other markets are secondary markets. So just when you go to secondary market, just make sure that you look at the data. Any other questions? Brad had some good questions. Is there anything else that you guys want to know about the real estate market? Or, by the way, since you guys are thinking about your questions, if you have nothing to do on Saturday, which other than watching college football, which is not even that early, but anyway, Saturday 9 a.m. in Raleigh, North Raleigh, I'm doing a show and tell. So if you want to see how I'm doing my show and tell, how I'm doing my new builds, where we are in the process, how I do my funding, how I manage my projects, be there Saturday at 9 a.m. I'm going to put the address right now in the chat. Last time we had 56 people that showed up. So it was a really, really big turnout. It was really, really nice. But it's a 301 Bickett Boulevard in Raleigh. We're starting there, and then we go to 2 more projects that I'm going to show you. So if you're into the new builds, which I've been a flipper, I am still a flipper, but can recommend everybody moving to some type of new build. Hi guys, you guys treating me nice and easy. Yeah, go ahead.
I wanted to say the Pinehurst market, the reason that's doing so well is, they're talking about the great wealth transfer of baby boomers are now, their wealth is transferring to, Gen X, their children. A lot of those people play golf. They're buying second homes down there. You're right. Know your market, but Pinehurst, just keep in mind, they have the U.S. Open coming in 2029, so people are ramping up. They're ramping up now for that, but you have to also know they do not allow short-term rentals in Pinehurst. No Airbnbs are allowed. You must have an Airbnb license, not for like full-time, not like your house that you own that you put on Airbnb. You must have a bed and breakfast license like that. They did away with that because they didn't want like people just coming in and out. They're kind of still snotty over there, with that. So just keep that in mind. Know that market well. That market, you're competing with a lot of people over there with building new homes that have very deep pockets.
And I forgot to mention this in the beginning of the call, and somebody smarter than me pointed it out. But do your research, guys. This what I mentioned here today is for entertainment purposes only. This is advice, but you got to do your own due diligence, do your own research, and like I'm doing. So make sure you do that. Any questions from anybody about a property you're looking at, what the next thing is you should do? And otherwise, if not, this will be the first meeting that we cut it short.
I have one last question.
Yeah,
the one you have on 301 Beckett Boulevard.
Yeah,
Was that a tear down and a new build?
Yeah. Yeah.
Okay.
One tear down, 3 new builds.
Oh, one tear down, 3 new builds. Okay.
Yeah. And I'm doing another one in Raleigh where I'm moving a house across the street, and then where that house used to be, I'm building 5.
Wow. Okay.
And I dive in all the numbers. I have no secret. Like, you want to know my numbers? I'll tell you all the numbers, and we'll dive right in. Yeah.
And are you a general contractor, or are you hiring someone?
I'm hiring someone. So,
Okay.
so yeah, and that's a great question. So when you do a new build, I always teach people. I had a conversation with a good friend of mine earlier last week, and he was asking me for some advice. There is no golden rule in real estate, right? Like, if I used to be in clinical research, but if you're in clinical research and you do research is done a certain way, and you are repeating that research on that mice, on that animal, you're repeating it the same way over and over again to make sure that the outcome is either the same or different, but you're doing the research the same way, right? In real estate, there is not a golden ticket to say, hey, this is the only way you're having to do it. So my way is, I hire everything out. It sounds like I never do anything, but I never wanted a job. I always wanted an income. If I'm a general contractor, a real estate agent, or gosh knows what, I'm creating a job for myself. My job is to be an entrepreneur. And an entrepreneur means that I am the project manager in a project. And that's the role I take very serious. The rest, real estate agents, I'm happy to pay them. GCs, I'm happy to pay them. Lenders, I'm happy to pay them. And then people say, but then you could make more profit. True. I'll make enough profit. But to make enough profit, I just have to offer higher or lower money, right? Like, if you could have maybe offered $200 or $200,000 on the deal that I have to offer $150 on, because my costs are higher, right? Like, real estate is just a numbers game. If I want to make on a new build, I don't do a new build if I don't make $100,000 profit. So, Brad, if you're doing that and you're the GC and you are your own real estate agent, you can save yourself about 23%. 20% is normally the upcharge from a general contractor, or 17%, somewhere in that range. And if you are your own real estate agent, you can save yourself 2.53% in fees as well. So that means you might be able to offer 23% higher than I can, and that is just what I it is what it is. I just have to make more offers to get maybe the same amount of deals that you get. I just have a higher cost. So no, I wanted an income. I didn't want to have a job, and that's why I am not my own GC. I am looking to put a GC in-house for next year. So that's what I'm working on, and maybe I'll get a realtor that I put in-house as well, and save some money there. I'd rather build a team than I do it myself. Marty has a question, and you can come off of mute as well, Marty. I am not in the real estate industry yet, but I aspire to do a flip property and buy and hold rentals. Which approach, flip or buy and hold, would you recommend starting with as for first time? Marty, great question. I don't know your financial situation. When I got started in real estate, I was on food stamps, and I was just looking for some substantial money. So I did both flip and I purchased also rentals. So yeah, I don't know if that's the right answer, but I went all in and I did both.
Okay.
But if you want to diversify, you can do the 3-1 method. So if you buy 3 properties, you turn 2 into rental and 1 into flip.
Okay.
Do know that a rental can, depending on the age of the house, can be an expensive hobby. Hence the fact that I'm pulling out of all my rentals, I'm pulling out of most of my rentals, because I focused on rentals that cash flowed, and that often meant that I had to invest in older homes.
Right.
And I also focused on Section 8, because I wanted to provide housing for every single income class. But both almost cost me my business, because an older home needs a lot of repairs.
Right.
If you have to replace an HVAC and you're making $300 positive income, right? That means you're setting aside CapEx, you're setting aside taxes, you're setting aside insurance, you have a management fee, you have repairs that you have to make. If you make $300 after you set aside all of those expenses, and you have to replace an HVAC, that is another 3 years before you break even again. If in the meantime the roof doesn't go out, the plumbing doesn't go out, the tenant doesn't turn over, right? There with a rental, for me, there are too many ifs. So that's why if I advise people, I say do the 3-1 method. Buy 2 rentals, 1 flip, because that 1 flip can potentially fund the work that you might have to do on your rentals.
I love that.
Thank you. I appreciate you saying that. But I don't know if you heard me earlier in the meeting, but I whatever you do, build, rent, flips, just focus on 1 zip code and become an expert in that zip code. Otherwise, if you start focusing on all the zip codes in around Raleigh, you never become an expert, and you get frustrated that you never find a deal.
I did hear that, and that was actually really good to hear. I like kind of focusing where I'm at, but I mean, everything's a bit in theory, but I'm in Garner, which is hot.
And
adjacent to 27610, and I'm like, I don't know.
Yeah, I think I just shared data here. Garner days on the market here in Johnson County portion is 88, but if you go to the Raleigh or the Wake County side,
that's the side I'm on.
Yeah, if you go to the Wake County side, days on market is 69 days on the market. So there's still a lot of inventory that is turning here. 35 units here, and in the Wake County side it's 62. So yeah.
Okay.
Awesome. Any other question, Marty?
Plenty, but I also kind of don't know, I guess, what angle to shoot from. Well, I will say this. I haven't seen all of your YouTubes yet, but I did find one, I think that was a clip, and it was really intriguing because it talked about how someone offered their services for free to kind of go under your wing and learn the industry. I think they offer like their project planning skill set. I guess, let's say outside of you, like, is there really, I mean, it's kind of sounds like a dumb question, but is there really, I guess, is that really a way to go? Because like me, I work in tech, and I look at it like, well, I know project planning, and I have some tech skills, and I do, quality assurance, and that kind of transfers over to, looking at property quality. I'm like, I'm just curious, I guess, like, can I offer that and have that same result?
Really great question. So I've been incredibly blessed with my project manager. He came to me through my business coach, and I was looking for a complete opposite person that I am, and he is. So it works out fantastic. You got to vote in any type of deal, definitely in the real estate, but also in any other industry. You have 3 components in a deal. First one is you have the deal. 2, you have the time, and 3, you have the money. When I preach that to people, then people think that they have to have all 3. What my project manager brought to me is he didn't bring the deals, although that he sometimes brings the deals, but he gave me his time.
Right.
And in return of his time, I'm giving him a profit share of the projects that he works on. Because it's so valuable to me that we do flips from the Triangle to the Triad, Winston-Salem, all the way down to Wilmington. Yeah, I don't have the time to drive all the way to Wilmington and to go there. And luckily, he does, and he did. On top of that, I'm great in I'm a visionary. I know where to go with the business. I know what to do. I know where to find the deals. I know where to find the money. I needed somebody that's really strong in project management and give me the data and give me the details that I needed. And that's what he brought to the table. So what are you bringing to the table of those three, right? Is it the deal? Is it the time, or is it the money? And then hone in on that and find somebody that is missing from the three-legged chair, that is missing one of those legs. And that's the person you're going to focus on.
Nice.
Yeah.
That's super helpful. Thank you.
Absolutely. And then to your point, Marty, what Bill, by the way, Bill is talking on tax strategies and real estate and everything for TRIA in October. So if you want to talk, if you want to learn, for anybody on the call, if you want to learn on how to keep your money in your pocket, be there in October. Bill, top of your head, do you know which is it, October 11th or October 10th?
I think it's the 9th. Let me check.
Oh, October 9th in the McKinnon Center in downtown Raleigh. If you go to the TRIA website, you can see him there. Yeah, Bill will be talking about tax strategies, because he just replied to your question about should you do a flip or a rental, and there are different tax implications.
Right.
My wife just got the tax returns for us this year, and she goes, Erik, should I worry? Because it looks on paper we lost money. She still doesn't get it after 9 years being in real estate. I said, yes, honey, we lost a lot of money because we get all these tax write-offs from the government. So if you want a tax write-off, you go into the rentals. Yeah. BJ Ward is asking, Brad is raising his hand. Brad, before I go to BJ Ward, what was your question?
I had two questions. One's easy. Yeah. I heard someone say you have a YouTube channel.
Yeah.
And I just tried to do a quick search on your name.
Okay.
But I'm seeing, I don't think this is you.
I'll put it in there. It's Reed, a real estate investment. It stood for something. Now I forgot my own name, but I'll share it with you right now. It's Erik, and you can find me at Erik Timmermans as well. But I put all the recordings from here. I put all the recordings of these recordings and other recordings. I put them on there for people to look at. So
yeah, you put them on this YouTube channel.
Yes.
Okay.
Yes.
And then the other question I had was, you mentioned to focus on one zip code.
Yeah.
And maybe this is because you have a team and you've been doing this a while, but I heard you saying you're not just working in one zip code, you're working in multiple cities.
I'm happy that you're paying attention. Yes. Now, so here's what I meant, Brad, with that is, so when I got started in 2016, I focused on the zip code 27703. It was the year 2016. I think we can compare it almost to a year like this. What I mean with that, 2008 happened 8 years ago. It took until 2013 for the real estate market to really come up back to the same levels. And 2016, people were still a little skittish. But I got so frustrated with the real estate market and almost went a different route until I started focusing on the zip code 27703. Because everybody was beating me to the deal. Because when a property hit my inbox from a wholesaler, or when a property hit the market, I was like, oh, I'm going to have to do my research. A few hours later, because I still had a W-2, a few hours later, I emailed the seller and said, hey, I'm interested in your property. And they'd be like, yeah, go stay in line and good luck. So what did I do is, like, I was like, okay, let me focus on one zip code and become an expert in that zip code. So as soon as anything hits the market right now in 27703, I know that the average sales price in that zip code is around $250, $230 per square feet. So if something hits the market for $180 per square foot, I'm going to look at it and I'm going to evaluate the deal. But if something hits the market around $220 a square foot, I'm like, all right, good luck. See you later. When you know that zip code, Brett, now you can move on to the next zip code because you already know this one zip code. And then you go look at another zip code. Rather than right now, you're going to be focused on 10 zip codes and you're not an expert in any of those. What is the saying? A jack of all trades is an expert in nothing, or something like that. That's basically what you do if you focus on the entire triangle as a market. Focus on one zip code, start there, have a first deal under your belt, or have a property under contract. While you're on the contract, focus on the next one. Now you build credibility with your lenders, you build credibility with your team, and now you can start growing in other areas.
Hey, perfect. Thank you.
Absolutely, Brett. BJ Ward says 2 flips, 1 rental. I've been telling him that as well. It says 2 flips, 1 rental, rinse and repeat, depending on the person and your goals. Absolutely. I appreciate you, BJ Ward, being on this call as well. Alicia says, would you ever do Section 8 in the Midwest to go for higher cash flow? Midwest, I have another 4-plex in Akron, Ohio, and we do Section 8 there as well. I don't want to bad talk about Section 8 because we need to be providing housing for everybody, from left to right, top to bottom. I don't care where you're from, but I would advise you to diversify. Don't only focus on Section 8. Make sure you also have a few higher end rentals in there. The problem that I ran into, and maybe it's the market, although I do see it in Akron, Ohio as well. Section 8 in different markets, first and foremost, can be very different. I hear horror stories from New York. I hear people that will never do Section 8 again. I would diversify a little bit, because the problem that I ran into, how I looked at it, is people do not appreciate things they are getting for free as much when people are having to pay for it. And what I mean with that is, when we evicted somebody in Section 8 because they stopped paying, because their program changed, because they had a higher income, and then Section 8 was like, oh, we won't pay the entire rent anymore, just a portion. We often had to do an entire flip on that property. Not only did they leave most of their belongings behind, they also thought that they would do me a favor by completely demoing the entire unit, or leave the unit with a large amount of repairs. So if you're interested in Section 8, it is still a good market to invest in. It gives you guaranteed income from the government, but I would diversify so that you not only have units that require a lot of repairs when people are turning over, if that makes sense. I hope that answered your question, Alicia.
Yes, thank you.
Absolutely, anytime. And thank you for joining. PK is asking, if you listening now, how soon we want to sell before the winter hits? Meaning, how would you prepare for winter session when selling and buying? Really great question, PK. So I would really look at the real estate data. I also would really want to see what the Fed is going to do next week. But to that, it is all about the balance of the property. What I mean with that is, like, you don't want to be going upside down in your property. You want to make sure that if you hit the 75% mark of the value of the property, that you either start the refinance process or drop it so low that you are guaranteed to sell it. I wouldn't want to carry a property into November, definitely mid-November, if I have already been sitting on that property for quite a while. Like, if I list a property now and I still haven't sold it in mid-November, and I have been really, really aggressive with my pricing, then I would really see, can I hold it until January, February and still break even or make money, or do I need to pivot right now and make it into a rental? Now, some of the things that you can consider doing without having a price drop, and there are some nuances to it, so make sure you elaborate with your realtor on that, is change the pictures around. Just make sure you change the pictures. Make sure that you pick a different front picture. Lisa Coleman, who is on this call, is a very good real estate agent. She told me change the pictures. And she also told me that research shows that if you are putting all the pictures together, meaning all the pictures of the kitchen after each other, all the pictures of the master bedroom all behind each other, that people are not scrolling down as much as when you just randomly throw all the pictures into a listing. That goes against my HDAD or anything that I anything that I want it organized. I need everything in order. But if your pictures are all over the place, people will continue to scroll down further. Change the language. See if you can change the language on your listing. Throw it in ChatGPT, throw it in Gemini, or whatever you do, and see if you can spice up that listing text a little bit. But if you really need to sell a property and it is mid-November, for what it's worth now, what I mean with that is I do not know if the activity in the real estate is going to continue to increase after rates dropped. As it stands now, September 8th, a week before the Fed is going to announce price drops, I will be very aggressive come November. Yeah.
Thank you, Erik.
Absolutely. Thank you. Laura is asking, will you discuss how you determine an offer price on a flip or tear down a new build? Sure, absolutely, Laura. Do you want to? Do we want to look at your deal, or do you have an example?
I don't. I think I just remember you saying on some of the other calls that it's a 60 to 70% or something to that effect. And then I know we've discussed that your build price is a certain amount too, that per square foot that you're looking to try to stay under X amount. And I'm just trying to kind of put that all together in my brain.
Yeah, very good. So I have a form that I do, but it is all in the cost, right? Like, so if let me just go to my calculator so you guys can see it, what I do there. But it is all in what are you looking to make. Calendar real quick. Here you go. What are you looking to make? So on a flip, I would not do a flip if the profit is not 10% of the ARV, no less than $25,000. So what does it mean? If you're in a flip and that flip is going to sell for $300,000, I would not want to make less than $30,000. If I'm in a flip and the after repair value, the ARV is 160, that would mean I would make $16,000. I would want to make $25,000. In a build right now in this market, that might be different next year because I realize that my margins are a little high, but I have been very blessed that I've been able to pick up some really good deals. Right now for a new build, if I don't make from the beginning with 10% buffer, if I don't make $100,000 on paper, I would not want to do the deal. All right, so we have a few properties in here, but let me share you this form. So I have this form here. I have this form here. I can share this with you. It's an Excel form. You put in your property address over here. You put in these three things in here, and it will tell you what your profit is on each deal. So, say for example, we're buying this property here, and we're buying it for $100,000. We have gotten a bid for $50,000. Oh no, $50,000, and we have an ARV of $350,000. Then this form calculates that I will be making. I'm doing something wrong. There you go. That I will be making $160,000. Now, how is that calculated? The loans I'm getting have a 2%, 12% fee, as you can see here. They have a 2% origination fee, which is calculated. They have lender fees per month, so that is just a 12% divided by 12 plus the 2%. Realtor fees, yes, I calculate the realtor fees at 8%. Why? You always have attorney fees, you always have attorney fees, utility fees. Let me do this, copy link. I'll put a link in the chat right now. Guys, I would recommend if you download this form onto your computer, because if what you can see, if you don't do it, other people can see what you're doing here. So make sure that you download this form onto your computer, otherwise other people can see your deals. But I calculate my realtor fees at 8% because you have attorney fees, you have utility fees, you have anything. I have never gotten a fee. I could have specified that in different columns. I put them all under one umbrella, and so I have a realtor fee of 8%. Here you can put in how long you think the project is going to take. Always shoot over, always go longer. Realtor fees, and then all the fees are calculated here, and that will give you a profit of $161,000. If I run into this deal, I would have done it day and night, of course. So, but yeah, and then for building, it's basically the same thing, right? For building, you just know what am I buying the land for? Let's go to this deal. So I bought this property in Raleigh last week or the week before last. It's not this house. I don't know why Street View puts it here. It's this vacant lot. So when I get a deal like this sent to me, I send out 2 emails. One to a surveyor I know and one to a realtor I know. I said, what can I build here? That's the only questions they both get. And if they come back with the same answer, then I'll do the math. Right now here, we're going to be building a 2,100 square feet home. I don't know why this is so zoomed in. And 2,100 square feet, I build for around $165 per square feet. That is including the upcharge of the GC. So 165 times 2,100. My building cost for a 2,100 square feet home is $346,500. Okay, then we're not there yet. Then we need an architect. Then we need hookup fees, and we need some land clearing. So if it's a single family home, an architect is somewhere between $5,000 and $10,000. Hookup fees, I would always calculate $15,000 to hook it up to the street. So let's add another $50,000 on top of it. So I am in this deal for $406. So I'm going to give you the true numbers on this deal, and you tell me if you would have done it. I bought that lot for $175,000. I'm building for $406,500, and I have gotten an ARV from the realtor for this. $44,000. Hold on. Anyway, I think I have the ARV wrong, because I would have not done it for $44,000. I think it's this. Let's see if that. Yeah, there you go. 878. So that's how I run my numbers, right? But here's the thing. Even if I don't sell it for that, and I sell it for, let's go for this, I still make $20,000 if I sell it for $699. Right, so that's why in a new build, in a market like today, where there is a high number of inventory, there is a low number of new building permits. That's why in the market like this, I want to be building with a large margin. If I drop if I drop the ARV $87,000, meaning I can sell it for $787, and I drop it to $699, I still make $20,000. So you want to make sure that when you do new builds, when you do flips, make sure you have a lot of margin. That's why here, this is the house I show you guys. This is the house Lisa Coleman sold for me in 4 days. Oh. Oh, they have it for rent now. Look at that. Anyway, let's go to the data. I had it listed for $369 on August 1st. I was on a contract on August 6th, and I sold it on August 28th. All right, so I lied to you. 6 days. Sorry. But I was close to asking. I thought that I could sell this for $360. I adjusted the market, but you see, I got it for $185. I had a lot of margin on this one, and that's why I'm doing flips right now. I learned from 2024 that you gotta have to have a lot of margins, otherwise you might be losing your business. So when this is the best time to get in. I truly mean that. So for people like Marty, who was here on the call, this is the time to get in. Why? There is hardly any competition. If I feel sorry for those people that were trying to get started during COVID, right? The people that had to get started during COVID, they had to compete with just the buyer, the average buyer, but also with an uptick in investors that wanted to buy. The reason, again, going back to the beginning of what I said in the beginning of the call, the reason Warren Buffett is now investing $1 billion into the real estate market is because he knows he can get real estate companies, in this case, he can get real estate shares for dirt cheap. Right now, for you want to become a flipper, now you can get the deals real cheap. There's desperate buyers out there that want to sell it, and they want to sell it to you. Where if you wait until next year when the real estate market picks up, yeah, your competition pool is going to be larger. It's going to be harder. This year, you got to put a flip on the contract with a large margin. And if you do a flip now, it is September. So this is September. You're going to be closing in October. It's going to take you 3 months. So October, November, December, January. If you pick up a flip now, you're going to be hitting the market when it's spring market next year. This is perfect timing to pick up a flip. As a matter of fact, I don't have it by hand. Oh yeah, I do. No, I don't. Shoot. My 90-day goal is to pick up 8 flips. I need to be buying 8 more flips in the next 90 days. So that I hit the next spring market, and everybody's going to be like, "Oh, look at Erik, he got lucky." No, Erik, it's time to market, right? I'm buying now, and I'm selling in the spring. All right, Brad is saying, thank you, Marty, for the heart. Brad is saying, did you say 10% on the flip? 10% on the flip, no less than $25,000 profit. 20% on ARV, no, 10% of the ARV, Brad. So if a property sells for $300,000, you're looking to make $30,000. And
So
100,000.
you say 10% on the flip, but minimum 25,000.
Yes, sir. Yeah.
10% on the ARV, but no less than 30,000.
No. 10% on the ARV, no less than $25,000.
Okay.
With a 10% buffer, right? So if your contractor says, "Hey, I can do that flip for 55,000," for 50,000, you're gonna calculate it at 55.
Okay.
Your contractor, and it's not their fault. It's not their fault. Your contractor is always going over, so you're always going to be buffering. You always have a buffer of 10%.
Okay. All right. Thank you.
Get started, Brett. I hope you do. I mean, guys, for those that don't know me, I got started when I was on food stamps. I don't think, I don't hope, I pray that you're not there. That's a bad situation to be at. But if I can get started on food stamps, then what is your excuse? Just do it. Nike, just do it. Hey guys, we finally got some questions. We finally jumped into it. Yeah, Marty, go ahead.
So hypothetically, I mean, that I thank God that's not my situation, but hypothetically, if let's say I'm launching from what feels like zero, where do you go from there?
So you're looking to purchase your first deal.
Mm-hmm.
Okay, so this is what you do. It's Monday Night Football, so you're gonna watch the football game, probably or not. But anyway, you're watching TV, and tell me what is the area you're thinking about?
Close to home, Garner 27529. It would be the Wake County side.
Okay, I'm on Zillow, right? You can do it on Redfin, whatever. All right. Whew, there's nothing for sale here. Do I have a filter on? I probably do. Reset filters. Yeah, there you go. All right. So I'm just gonna be scrolling, right? Like I see 1,300 square feet home for 335. I see 1,300 square feet home for 309. So based on these two homes, about 1,300 square feet gives me about 310, 315. All right.
Mm-hmm.
So I see 2,000 square feet for 375. Okay, 375. Okay, nice. Perfect. So I'm just gathering data right now. 1,800, 418. Perfect. So what I'm doing now is I'm going to be looking for that property. This is 2,100 square feet for 300,000. I'm going to be looking at the pictures real quick. See if they've got anything. No, it's flipped. Okay, so nothing going on there. I'm just now going to scroll. There's no value add here. I'm just going to scroll and see if I see something ugly.
Sorry, on that one that you just scrolled past, you said it didn't have what?
So this is $280,000 for 1,100 square feet.
Mm-hmm.
It's just price at value based on what I just saw earlier. And then when I go look at the pictures, they actually took some time to take some pictures. I think the problem, what the heck? Like, guys, seriously, like who's this agent? I hope I don't insult agents that are on this call right now, but what's going on here? Like, why? Like, what is this picture? Like, so it's all about the presentation, and this presentation right now is like mind blowing. They did virtual staging, and the reason I say that is because if you go here, it's empty. Virtual stage. Why this fly trap, guys? Come. So you see that it's just in the presentation. I would never do virtual staging in this day and age. What I mean with that is, yes, this is great. This is fantastic. People get an idea, but then they still walk in and they still see this. I changed 2 of my property, including one property I did with PK. I changed 2 of my properties from virtual staging to real staging, and I got offers after I did it. Anyway, here is just a wrong presentation. There's just little details in here that I'm like, you did not do the right photography. So anyway, so I wouldn't do that. I'm looking for. I taught my kids that if you smell cat pee, dog pee, you smell money. I don't really see anything right now. 2,000 for 379. Now this is interesting, but it's very short on the market. The reason I say that is, why is there only 2 pictures for such a large house? So something is going on here. And you see how ugly it is?
Right.
So it's coming soon. All right. Okay, whatever. I don't know why people do that. So yeah, you're in a tough market here. But that's what you do, right? Like you're just going to be sitting there scrolling. Now, when you find something,
Mhm.
and I want to find you something so we can run some numbers. But when you find something, you're gonna run an ARV. Now, an ARV, you run an ARV by looking at two houses. So say, for example, we do this house. This house is 3,000 square feet. It is, I think the last upgrades were early 2000s, maybe. Oh,
Oh my goodness.
Playboy Mansion here. Hey. Oh, wow. That's very interesting. Oh, my word. Anyway. That is the wrong example. Good old Garner. Good old Garner. They had like a hot tub in their garage, I think. A converted garage or sunroom. But what you do is you're going to, when you've, oh, look at this. I found it. Yay. Let's
Oh,
go.
I think I've even seen that one.
Prime investment opportunity. Size sees a chance to invest. Okay, so they're marketing this as a build.
Mm.
All right. Now, that doesn't matter to us. We're going to look at it. Oh, we're going to say, wow, we see money. Ooh, it's a rough one. Yeah, that's definitely a new build. But anyway, I'm not building in Garner, so anybody that's on this call, if you want to pick this up, I think you can do two houses here. You got to look at the zoning, but really quickly looking at it, I think there might be one or two property available. Let's do this real quick. I always do this. Oh, no. Maps, Google. There you go. Yeah, so this property has very small road frontage.
Mm-hmm.
So what you could do is a flag lot. That basically means that you do a road here and you divide the lot back here and build another house here in the back.
Mm.
If zoning allows that. But for all giggles, we're going to do this as a flip. So we are, oh. I don't know what the square foot price is. To run the square foot price to square footage, I need to know how large the house is. But let's say this house is 1,500 square feet. I would then look at 3 other properties that are on the market. And normally you can do that by doing this way. So let's look at this house. This house is about 1,800 square feet. If you scroll down here, you normally get similar properties that are about the same size and in that area.
Okay.
You look at 3 properties that are on the market. So I'm going to open this and I'm going to stop sharing this. I'm going to share this. I'm going to share this.
Oh, while you're doing that, I did check it against the Wake County assessor site, and I don't know if it's because it was built in 1917, but it's a 1-bedroom.
Yeah, I think they have it listed as a teardown.
Yeah.
So what you do is 1, 2, 3. I know I don't have a subscription. I don't want to have a subscription because I think Microsoft is out of their mind. Because if I go to Google and I want to have a Word document and I go here, I have a free Word document. So why would I pay for Windows? I'm very cheap, as you guys can see. So if it's free, why would I pay for it? Anyway, all right. So here, Google Documents. I have 123 Main Street, and 123 Main Street sold for $125 per square feet. All of these properties are in a 10% difference of each other, meaning if it's 1,800 square feet, I cannot go lower than 1,700. I cannot go over 2,000. I need to find almost the same amount of bedrooms and bathrooms and a garage. Yeah.
Okay.
So 123 Main Street sold for $120 per square feet. 567 Main Street sold for $165 per square feet. And then 3545 Main Street sold for $160 per square feet. This is active listings. Active, meaning they are on the market. Then you do closed / sold listings. And you go to 321 Main Street, sold for 155. 990 or 900 Main Street, sold for 145. And 890 Main Street sold for 125. So what I'm doing now is I'm getting my calculator out, and I'm going to be adding all of these square foots up together. So 125 plus 165 plus 160 plus 155 plus 145 plus 125. I have 875 is my number.
Mm-hmm.
I'm going to divide that by 6 because we looked at 6 different properties.
Right.
So divide that by 6. I now know that the average square foot price for a similar house that I just looked at is $145.80 per square feet.
Okay.
Now I have a target. So if I now look at a 2,100 square feet home, I then now know that that 2,100 square feet home will sell for $306,000.
I missed it. You said it would sell for how much?
306.
306. Okay.
Now, Eric, I have a question,
Yeah.
kind of follow up. So if those 6 you looked at, the 3 active and the 3 sold,
Yeah.
but if they weren't completely renovated. So I have a project right now that we're in the closing stages on it, but we're planning on doing a complete gut job on it.
Yeah.
And renovating. So how do I know I'm comparing apples to apples?
Yeah, you want to make sure good question. So if you do that, I wouldn't get too hung up about the finishing product. What I mean with that is, of course, if you see this, right, that is not comparable to your end product. But if it's like this and it's built in the same year and it is kind of livable and nicely done, although maybe the finishes are just slightly lower than yours, right? Like a white stove, a butcher block, and a laminate countertop, right? This is cheap. This is very cheap product. I would still put it in there.
Okay.
Because how are you now competing in that today's market? You're going to paint this. You're going to take this little space heater out of this place, and you're actually going to put a product on the market that is now way better than this, and you're making profit, and you calculate it. And if you put it on the market for $207 per square feet, you know you're going to be selling it way quicker than they are.
Okay.
Because they're sitting on the market for 94 days.
So I'll tell you something, and this is just my 3rd one that we're doing. So I don't have much experience with it. I'm doing something that I'm calling equity share. So with the equity share, it's a little more risk for me. I'm going in, and like I say, this is just the 3rd one where the homeowner owns the house. They're in a hot area, kind of an upscale neighborhood, but it's an older home.
Yeah.
I'm going to invest in the home about $150K.
Yeah.
And then once we put the house on the market, I will get back the $150K I put in it. Plus, I'll get a percentage of the equity out of the house.
Plus a seller as well.
The seller gets, so in this particular deal, it's a 12% equity share.
Yeah.
So I'll get 12% of it. We're talking about after all the fees, the realtor fees and everything else, staging fees, any kind of concessions. We'll split the, it'll be an equity share. I'll get 12% and they'll get 88% of the profit. But it's a little risky. And I say, so I do have some margin built in the renovation costs. So it's not costing me a 150, but that's the market cost to so like you mentioned, that 20% I have built in on that one. So I'm making about the 20% on the 150, and then I'm making 12% on the equity share.
No, and that is a brilliant way of doing it, and it's a new way of doing owner finance. I would be very careful with that, just because one of my arguments would be is like, like me driving to the property, it's a cost, right? I'm putting gas in my car to get there, so it's going to be cost. So what the seller in this case has a lot of risk, because you can just drive up the cost and have $300,000 in cost, and then they might not make profit. On the flip side is, you might be doing all the work, and if you're only selling that with a $10,000 profit, they're getting $900. They're getting $8,800, and you're getting $1,200, right? So I like it. It's creative. That's why I like it. But I would never go over 50-50, depending, of course, what you offered them and what they were on the market for. And secondly, if I was a seller and if I was you, Brad, I would be very, very specific in like, hey, I would do it based on the sales price. So I would have said, okay, I buy it for 200. I'm going to invest in it 150. So I'm at 350. I'm anticipating it to sell for 400. So you're making 12% of 50,000, which is $6,000. I would have said any profit above 660, we share 50-50. So I would already buffer in a certain amount of profit for yourself before you do anything, if that makes sense.
Okay. No, I like that. Yeah. Okay.
Yeah. And therefore it gives the seller a little bit of a guarantee, because you now, Brad, are driven by keeping your costs low, because anything below 360 is yours.
Okay.
Right. So you're driving your costs down to get a higher profit margin, where now in this instance, you're just like, oh, I'm going to the Umstead to get a massage because I was so stressed out. So that is a cost to this property, right? Like, and I'm not saying that you are like that, but that can be the situation you run into. So what I would do is, if I do profit share with my lenders or with other people, I say the profit share starts at this level. So I know at least my minimum walkaway number.
Okay.
Because now, because if you sell it now for $365,000, in my instance, you would have at least made $10,000 profit no matter what you sell it for.
Okay. All right.
It's brilliant. You're doing. I admire you for doing creative stuff, but make sure you cover yourself and you cover your bases. So.
All right. Hey, I appreciate that. Thank you.
Yeah. Karen says, I'm new to the group. Karen, welcome. We should celebrate. Just wanted to know how you learn to flip houses in the business, resources, books, YouTube. So my YouTube channel is above there. Now I am part of a non-profit organization. So I'm not getting paid by it. Nobody's getting paid in this organization. But if you really want to get started, join tria.com. It's in the link, by the way. It's in the notes. Tria is a networking event. We charge $20 a month or $200 a year, and we do 18 events throughout the month, including this one. And that's where I found all my money, and that's where I learned the tricks. I would listen to Bigger Pockets, biggerpockets.com. That is I think that's the largest real estate networking. They used to do a podcast, but join the tria.com community. Go to one of the events. There are free events, there are paid events. We are having a main meeting this Thursday in the McKinnon Center in downtown Raleigh. But that's where I find when I got started in 2016. That's where I found my deals. That's where I found the money. That's where I really found anything today. Marty is a new member. Woohoo! Bill is going to be talking there. Bigger pockets. Yeah. Bill has a good advice. Bigger pockets, real estate rookie podcast. Excellent for beginning investors. So there you go. And Karen, I hope you be very successful in real estate. Similar to Marty, similar to Brad. I hope you all are very successful in real estate. And come join the community. Check it out. Check it out for free. If you come Thursday, I'm the host of that meeting. I'll let you guys in for free if you mention my name. And just come check it out. They say you become in 90% similar. You come in 10% difference of the 3 people you hang out with the most. So hang out the most with people that you want to become. Yeah, do that. Hi guys, we are 8:45. I thought this was going to be the shortest meetup, and then you guys are starting to finally hit me with some real questions. And now this is almost the longest meetup we have done. So I appreciate it. Any other questions, or was I able to answer your questions tonight?
Thanks, Erik.
Bipin, I appreciate you. Thank you so much. Oh, Tori has a question. Yeah, Tori, go ahead.
Did I miss something? I was pretty sure. I was just curious if you were gonna kind of alpine on the notion of a national emergency for housing.
Oh, it's not so. There's a few things I want to touch base on, but it's not. It's rumor so far, right? Like it is a rumor that is he going to call an emergency for the housing market, and what is the impact? Nobody knows what the impact is. Is that going to mean that he's going to lower interest rates and going to lower supplies? What does an emergency mean? Then the American Corporation of Lending, basically merging the FHA and Fannie Mac and Fannie Mae, merging them together and calling that a new department. There are rumors about that as well. I haven't touched base on that because I'm not able to see data. Yes, Trump has or is submitting an LOI, an intent to buy both companies, but there's so much up in the air. If Fannie Mac and Fannie Mae are combined together, does it mean that we're going to see higher interest rates? Does it mean we're going to see lower interest rates because now the government is in charge of those rates? Tori, I appreciate that you're so on top of your stuff, and I appreciate that you're bringing this up. I truly do. And if you see anything that I haven't mentioned, please make sure you share that with me. But right now, none of these things are concrete. Are they up in the air? Yes, they are. But this is not political, but with this president, there's a lot of things up in the air that often have changed, like the tariffs. Sometimes there were 50% tariffs on a country, and then there were no tariffs. Similar to TikTok, right? TikTok was banned, and now TikTok has another 45 days. So, I want to come back to what I said earlier. I really want to make sure that if I give you data, that I at least know it's A, it's going to happen, and no, B, I know the impact on real estate. So, but you're really on top of stuff, Tori, which I appreciate. You're doing a good job.
Thanks, Erik.
Yeah, anytime. Appreciate it. And Tori, seriously, if you find anything, you got my details, you got my number. So I hope you text me or email me if you find anything.
All right.
Anything else from anybody?
Just curious, you said when you started, you were still a W-2 employee. Just curious, how long were you a W-2 employee before you went fully solo?
I started in 2016. I was 36, and I said to my wife when I started, I was on food stamps. I said, I'm very goal oriented, so I don't expect that to be the case for anybody else. But when I was on food stamps in 2016, I said, when I'm 40, I'll go full time in real estate. And And on my 40th birthday, I called up my boss and said, I'm going to quit. So that was 4 years later. And now I've been in real estate for full time for 4 years. So yeah, that's my journey. Yeah.
Nice.
Yeah. So because when you do that, right, that's why I say the 3-1 method. Because now you come to a point where your income from real estate is similar or slightly lower than your W-2. And when it's slightly lower, you're going to make a jump and you're going to say, in the next 6 months, I'm going to, this difference between my W-2 income and my real estate income, I'm going to wipe it out because I'm going to full time. So, yeah, it's absolutely doable. And if you come to TRIA, which you're now a member of, but you find that most people are W-2 employees and do 2 jobs at the same time.
Okay.
Yeah.
Cool. Thank you.
Awesome. Absolutely. Well, thank you everybody for joining. I really, really appreciate you. I do this every month. So next month, again, I do this on the first Monday of each month, but last Monday, of course, was Labor Day. So I'll see you guys in 3 weeks. I hope to see you guys at TRIA. Thank you so much, guys, for joining. Have a good evening.
You too.
Thank you.